This video is going to be slightly different. I'm going to become somewhat personal. I'm going to describe my Bitcoin story. When did I start buying? When did I sell? Why did I sell? What did I learn during the whole process? And what kind of implications does this have for the future, of course? Now, my journey has lasted for a bit over 7 years. And while Bitcoin during that time, of course, went up quite a lot, some people have taken advantage of that rally more than others. And I'm actually quite satisfied with how it played out for me. And I want to share the learnings that I made along the way. So here's the start point. It's April of 2018. It was the first time I bought Bitcoin. Now, why over here? Of course, I heard about Bitcoin already before, but we were hitting high after high after high. And I was already cautious at the time that at some point we might see a correction. I was not really happy buying into that rally. And the reason why I was so cautious was this here. It was the .com bubble crash. Now, during that time, I wasn't yet investing. I was too young. But I saw my parents investing. They got dragged into this whole investment world. They were not professional investors at all, but everybody around them bought into tech stocks. And so then, of course, the tech bubble came, but then subsequently the massive crash. Now, luckily, my parents sold early enough. They got out with profit. But still, I drew some parallels that something like this, a more than 80% crash, could also happen for Bitcoin. And so I didn't want to buy during this massive rally where we went from below $200 all the way then to more than $20,000. I waited for a correction. Unfortunately, I didn't time it too well. Initially, it looked like I was a genius, but then things came back down. Now, why did I want to get into Bitcoin in the first place, especially as the price didn't rise anymore? The reason was, at the time, there were very smart people that were in disagreement about the asset. So some people said that Bitcoin is a complete scam, Warren Buffett, for example. Others said that it's going to be the next big thing, the replacement for gold. Peter Thiel, for example. I respected both of those people. I actually wrote an article about this at the time in my personal blog. Feel free to read through this and pause the video. But yeah, the main gist is that smart people are in disagreement, and I didn't know enough about the asset to have a more sophisticated opinion on this compared to all of those smart people. So at the time, I already understood that I don't have to be the smartest person in the room in order to beat the market, that it's enough to just copy what the smartest people are doing. And when the smartest people, again, don't really know what's going on, it probably makes sense to just also have at least some exposure. And so I did what many smart people at the time said makes sense. I bought a bit of Bitcoin every month. I dollar cost averaged into BTC. It wasn't a lot of money. It was roughly 0.1 to 0.2 BTC per day. But here's the kicker. Because I thought about it that much, I continued buying in even after we had this massive 50% crash. This is when a lot of Bitcoin miners had to capitulate. So some Bitcoin miners were over levered. They were dependent on higher prices. They couldn't run their operations anymore, and so they sold off all their inventory. That's what caused this crash. But again, I continued buying a bit every month, somewhere between $500 and $1,000 each time. And so I continued buying, then came the first shock. This over here. Let's extend this to the intraday movements. In a matter of just 2 days, Bitcoin crashed by 50%. Now, this was the COVID crash that spilled over from traditional finance. So it was first the stock market that crashed, and then people in traditional finance needed some liquidity. They sold off everything that was risk on at the time. This is what Bitcoin was believed to be. And so that's then what crashed Bitcoin even further because there was less liquidity, of course. Just a little bit of selling depressed the price massively. And I find this time interesting to learn something about myself. Because in hindsight, of course, it makes sense. One should buy whenever Bitcoin crashes like this. But very few people actually did. Feel free to check out your YouTuber, your favorite crypto YouTubers that have been around at the time during those days. Check out what they said. Check out if they were all so sure to buy the dip. Some people did. Ben Cohen, for example, he bought massively and he announced this on his channel. Other people just did nothing. I was part of the second group. I simply had already too much money in the system to not care about a 50% drop. Just imagine, right? If you've got already several months of savings and suddenly all of that is going down. Now, luckily, of course, we subsequently recovered. And so I continued buying every now and then I stopped stopped buying at around 20K when we already hit the prior all-time high. Now, why did I stop buying Bitcoin at the time? It was because Bitcoin didn't feel like it had the correct allocation in my portfolio. So I also owned some stock. I also had some cash, of course, but Bitcoin moved from 3.5K all the way to 20K. So that was like a 6x return. And so of course, overall, even though I was still bullish on Bitcoin, I didn't want to add even more exposure. I rather felt like I should sell, but still the momentum felt very, very positive. And so I did not sell, but I also did not buy. But then after a while, I had an idea that was at around 35K. I still saw prices going up and I was still very bullish. Have a look at this. This is an IG post from the 4th of January 2021. That's in Hong Kong for an over-the-counter dealer when Bitcoin hit 30K. Bitcoin reached an all-time high at 30K, and here was my comment: that banner will need an update soon. And indeed, interestingly enough, the banner did get updated. So what did I do at the time? Because in the end, still Bitcoin was a huge fraction of my entire net worth, but I didn't want to sell and I wanted to ride the wave. I came up with the genius idea to reduce my risk by taking a personal loan. So I took a personal loan at the bank. I took 1 year worth of salary. I was employed at the time. I took 1 year worth of salary and I bought a stock ETF with this. So just VOO. I just wanted to rebalance my portfolio. I didn't want to sell Bitcoin. I want to have the right ratio of stocks relative to my Bitcoin exposure. I didn't want to sell the Bitcoin. And so having a loan for those stocks was okay. That was my thinking at the time. And in the end, actually it worked out. So the stocks did go up in value. Not much, but the main thing that it helped me to do was it helped me to keep holding my Bitcoin. Now, do I recommend to take a personal loan in order to buy stocks with it or in order to buy Bitcoin with it? It depends actually. If it's very easy for you to serve that debt, if the monthly payment is very low and your job is very secure, then it might sometimes make sense, because if the interest rate is low enough and the monetary debasement is high, right? It's on average 6.8% per annum. If your interest rate is lower than that, you only pay 2 or 3%, then it might make sense in some circumstances. Now, when did I sell? The very first time I sold was here, somewhere around those days. I don't remember the exact day, but I sold half of all my Bitcoin here, which, by the way, for that sale transaction was already more than 100K worth of Bitcoin. Yes, since I started buying Bitcoin, the price went up by 700%, but really the magic of this entire strategy was buying up more Bitcoin as it was low, having enough of a conviction to continue to allocate. Unfortunately, my psychology wasn't strong enough to buy again during the COVID crash. It took me several days, maybe even weeks, until I bought again. But at least I allocated massively during those times. And this is really what helped propel my very first step to some kind of a financial cushion. Now, I wasn't necessarily the luckiest when buying the Bitcoin. I bought it for different prices. I just allocated regularly towards it. The selling, one could make the argument, was somewhat lucky. But of course, at the time when you've got that much money in the asset already, because it went up that much, you are looking for an exit opportunity. I made so many gains and I wanted to find a nice exit. I was looking very closely to when does the momentum turn around? When does it become weaker? And so this is where this newer chart comes into play. So this is now from Glassnode and it just looks at the all-time highs. And again, I sold over here. And there was something interesting going on. When the market was very hot, right, when we hit the 20K, we made a new all-time high all the time. Then we had a first correction. Then again, we made a new all-time high, another correction, a new all-time high. But each time we made an all-time high, the relative growth was smaller and smaller, right? We didn't really grow that much more. It was not like the market got into price discovery mode. It was rather that whenever there was a new high price, people took profit. And so I didn't sell at the perfect all-time high, but when it then corrected again, I got spooked. I was like, I have to get out of this now. Not necessarily scientific, not necessarily any kind of back-tested theory behind this, but this is simply what I thought at the time, right? And it worked out, luckily, potentially. The momentum was clearly slowing down. And then came the first correction, so everything seemed to be genius, but then we saw another all-time high. I did not buy during those times at all. I've just sold. I started buying again over here at 20K. So this was after the FTX collapse. and after Terra Luna blew up, also 3 Arrows Capital, etc. This peak here was very suspicious. At the time, Michael Saylor became popular, and at the time also Elon Musk supported Bitcoin. But at the same time, we didn't see more on-chain activity. So at the time, I was already looking at the number of transactions per day, etc. And this second peak that we saw over there, it did not coincide with a new spike of active addresses or anything like this. It was just a few wallets that bought a lot of Bitcoin. It was pretty much an institutionally driven peak. Now, one more thing about this selling here. One of the main sources of information was Benjamin Cohen. Again, the guy that was very smart buying during the COVID crash. And again, have a look at your favorite YouTubers, what they did at the time. This is a video published on the 18th of April. And he already calculated regression bands. And he showed how we were very high on that trading range and how it's more likely that we go down than go up. And so that was another data point that gave me confidence to sell at those prices. How did it continue? The rest is history, right? I bought more and more. I even again took another personal loan around here. This time the bet was more educated. It was because the price was below the realized price. So that's the average cost basis of the market. I talked about this several times on this channel, right? But whenever the market in aggregate is currently in losses, it makes sense to be very heavily invested. And so when I bought over here, I did my first sale at 72K. That sale came because the value days destroyed multiple turned red. So that's when the whales, the long-term holders, suddenly start moving their Bitcoin. So at the time, I already had my YouTube channel and I was looking at these kind of data points regularly, several times per week. And so the more you look at things, the more you understand things, of course, the better you can time the market. I then bought back in at around 55K. The reason was that the long-term holders were suddenly buying again, so that gave me some confidence, and then I sold again at around 100K. Currently, by the way, I am exposed to the market. Again, the long-term holders are getting in. But there's of course also other reasons. I talk about this regularly on this channel, right? The 120-day simple moving average and the stablecoin dominance, etc. So there are some metrics that do give us confidence, but again, now I'm trading much more actively than I used to. And while today I might be highly exposed, this could change in a week or two. One of the most important levels is the 120-day SMA, and that's currently at 93K. If we fall below this, I will have much less exposure to crypto again. Now, I want to give a few learnings from all of this. I think it makes a lot of sense when you're just starting out with crypto in general to just stick with Bitcoin. And I also think it makes a lot of sense to just dollar cost average into Bitcoin first. So don't buy all of your allocation at once, just buy a little bit every month. Because when it then goes down, then your confidence actually gets checked. Are you going to continue to buy? If yes, you're getting nice entries. And if yes, you're probably also going to learn more about yourself, but also about Bitcoin. So what happens is the more allocation you have over time, the more you tend to also know about Bitcoin because you will watch videos, you will read things. The worst thing that can happen is that you learn about Bitcoin when everybody is hyped about it, when the price is very high, you put in all of your allocation, you don't know much about the asset yet, then the price is going down and then you panic sell because you don't know if it ever recovers because you haven't learned it. In general, you want to have your exposure to an asset class in line with how much you know about it, how much you're educated about it. If you don't know anything about property, it's probably a bad idea to buy a house. Once you have learned a bit about the local market, once you know how to value houses, once you know what potential pitfalls there are, then it might make sense to buy the first house. It's the same for crypto. You don't want to jump in heads over toes, put half of your net worth in BTC and then see this all erode and then say it's all a scam. Dollar cost averaging is an extremely useful tool, especially at the beginning. Over time, a very large position builds up. When then the next bull run comes, at some point you will have more money in Bitcoin than you want to have. And if at that point you're going to sell some of the BTC because you don't want to see the 60-70% drop, or if you then maybe take a loan to buy another asset just to have a balanced portfolio, that's of course up to you and to your risk tolerance. I'm not the only person that learned about Bitcoin at the time, but I know so many people that either did not invest enough, they maybe just put in $1,000 once and that's it. And then they turned now $1,000 to 15K, which is still fine, but it's not life-changing. Or I know the people that bought too much that then gave up along the way. Or I know the people that bought a little bit, they then saw maybe they don't have enough allocation as the price is rising. And then they got into all kinds of meme coin speculation. And again, didn't really know what they're doing because they didn't learn enough about meme coins. And then they lost all of their money. So I'd argue that the majority of investors actually didn't even get those 15x returns. There's a good chance that even among traders, returns are very much concentrated. That the vast majority of traders tend to underperform buying and holding because of active trading that's not very well informed, and then how few traders tend to make most of the money. Now, I definitely made more than 15x during the time, and I did ride the waves quite well. But now as the market is maturing, and now as we're likely not going to see another 15x in the next 7 years, the real money is in finding market inefficiencies. So that's what I'm currently focused on. Of course, knowing the macro picture is always useful, but there's even more money in figuring out what kind of altcoins are very good, what kind of altcoins are very bad, and can we potentially make money from some kind of arbitrage. This is not how to start the game though, right? You start by playing on level 1, by just buying into Bitcoin. Once you've done this for a while, once you've got some exposure and you feel experienced enough to play the harder games, or if you're okay to learn enough, right, to watch a lot of tutorial videos, etc., then you can play those more complex games as well. But again, don't do this just by yourself, right? Don't try to time the next 10x altcoin and then get wrecked in the process. I've seen it too many times. Now, it's quite fascinating that most people take the hard route. Most people try to make money in crypto by finding the next asset that does a 10x return. The problem is that most assets don't do that. Most assets go down. There are a few assets that take a lot of the returns, but it's a market where the winner takes most. On top of that, we also have to be right about the macro environment, as in if Bitcoin goes up, then most altcoins go up as well. When Bitcoin dumps, most altcoins go down as well. So really, I think there are smarter ways to make money. I think it's better to try to not focus too much on the macro. I think it's better to find price discrepancies where you don't have to find the few winners. Let me show you what I mean. What do you prefer investing in? Is it the line at the top or is it the line at the bottom? Now at the bottom, we see Bitcoin's price movement. So this chart starts in February 2024. And as you know, we have seen quite a bit of a drop during that time, a 30% decline after we're now back above 100K. But the chart at the top has much less volatility. During that time, it appreciated by more than 1,000%, while Bitcoin went up by only 115%. Or have a look at this chart here. This starts in November of 2020. And it went up by 9,000%. While at the same time, here is Bitcoin, it only went up by 500%. Now what I'm showing here with those charts at the top are actually not altcoins that outperformed the rest. It's not one of those few winners. Instead, we looked at relative valuation charts. So we looked at the Bitcoin price relative to a very poorly performing altcoin. Now I'm not saying what kind of altcoins this is, but in general, this is also a Bitcoin chart here at the top. It's just not relative to the US dollar, but relative to a very bad altcoin. Let's make an example. Check out this. This is PIF. PIF had a lot of token supply growth in the last 30 days. So here are the tokenomics of PIF. Over time, there's more and more supply hitting the market. Now, if demand doesn't grow as quickly as supply, the price should be going down. And as per tendency, that is right. So this is now the PIF chart. Now, PIF is an asset on the Solana chain. So let's compare Solana with this. The price didn't always go down. And that's because sometimes Solana rallies. And so PIF comes with it. Again, the problem with correlation, the problem of the macro environment. But when we look at that PIF chart, not in US dollars, but relative to Solana, suddenly we've got a much more stable trend. Now, this is not necessarily the trend we want, right? We don't want to buy PIF, but we want to do the exact opposite, right? We might consider buying Solana and betting on falling prices of PIF at the same time to then get the delta. So in the end, we cancel out the macro because we are long one asset. We bet on rising prices of one asset, in this example Solana, and we're betting on falling prices of the other asset. So in this case, PIF. So overall, what the overall market is doing when it's going up and down, it doesn't matter to our portfolio because one thing tends to go up, one thing tends to go down. The only thing that matters is the relative performance. And then we've got very constant declines Or if we now flip this chart, if we don't look at PIF relative to Solana, but we look at Solana relative to PIF, we get our nice growth charts. So this is now a more than 500% increase. And again, it's much less volatile compared to buying Solana directly. So this is, I believe, the easy way to make money in crypto. It is a bit more complex than just buying a random altcoin, but in the end, we have the odds in our favor because, again, most altcoins tend to go down because the supply expands over time, and we are also hedged against the macro. We don't care if Bitcoin and Solana go up or down because we go both long and short at the same time. We can have a very constant growth this way. And here is what I mean with constant growth. This is my portfolio development since I started trading this long short strategy. The maximum drawdown was 5.67%. The equity is 36K and the growth over the span of roughly 2 months was 11K. Now, the most important thing here is not necessarily how much this grew. That's of course nice. But what I really like is that the drawdown was so low. We don't care about the macro. We don't care if things currently go up or down. All we care about is pricing inefficiencies. And so think about it. Do you want to buy a lot of different altcoins hoping for the one moonshot that might make up for all of the losses that in the end might never come? Or is it maybe better to just continuously grow with very little downside? I think the latter is better. If growth is predictable and if you can manage our risk properly and if you can make money independent of the market situation, we've got something that's much more valuable than just trying to find the 10x that might never come. Now again, this strategy is not as straightforward as just buying an altcoin on a centralized exchange. We do have to learn a little bit, but I actually made a video just on that topic. You don't have to watch every single video here, but the one at the top, that's the most important one. Using perpetual futures on Hyperliquid to bet on relative valuations. It's 34 minutes after you've watched this. You should understand how to do all of those setups. How to bet on charts like this or how to bet on charts like this. And how to have the odds in our favor, right? With all of those red bubbles over here. And again, be independent of the macro. It's the constant growth that's really attractive. So again, here's that tutorial video. It's part of the premium membership, thebitcoinstrader.com. And of course, I also share my own trades. For example, over here, I shorted WorldCoin recently. WorldCoin relative to Ethereum. So we're betting on Ethereum to outperform WorldCoin. So that was on the 23rd of May. I'm sharing this because this position is now closed and I closed it on the 28th of May. And so in the end, when you've got the right risk management in place and you put on some leverage on the position, you can make really nice gains. Here was the Hyperliquid chart at the time. So it already went up a little bit since then. But yeah, people are making money with this, right? This is not just me cherry picking the data. Here, have a look at this. This was one member that made some money with the WorldCoin short. Another one over here and here and here. Thanks, Gerhard. The premium membership paid itself already. And so that's in the end the fundamental idea, right? It's about making consistent gains. It's not about buying random lottery tickets, hoping for the one salvation trade. So feel free to check it out. It's currently $125 per month. It used to be 165, but currently the attention on crypto is comparatively low. Once all the tourists enter the space, I will of course raise the price again. But right now, if you sign up today, then you will lock in that price. So everybody that signs up now will not get affected by the future price increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There should be a link to Premium directly over here. You just click on that card and it will lead you directly to the sign up page. See you over there. Cheers.